Well, the U.S. jobs number on Friday, out of the U.S. really triggered the downturn on world markets. It's hard to base anything on one data point, and now the case being made that the downturn we're seeing on the markets is more so as a result of all the issues that are still out there, cementing the view that recovery is possibly not going to happen as fast as many had initially anticipated.
Yes, I think a slowdown in China, a slight slowdown in China, the sovereign debt issues in Europe lifting their head up again, and then people waiting for good positive news out of the States with the job numbers, and that didn't come to tuition either. So a combination of a whole bunch of economic data that just really wasn't good, and a lot of fear back into the market at the moment, a lot of risk aversion, people taking money out of the emerging markets and back into the dollar. And we see the euro at its weakest level since March against the dollar. So a lot of risk aversion and money going back into the States.
Rob, it's in that context that we've got a lot of questions being asked about the US Fed, suggesting that perhaps quantitative easing 1, quantitative easing 2 didn't actually work properly, and maybe we need some further stimulus to come to the fore, not necessarily in the form of QE3, but stimulus of some kind. What's your view at this stage?
Yeah, it's a very interesting question. Do we need a QE3? I think that QE1 and QE2 show that they do work when they're there, and the markets do pick up, and it does get the economies moving. But as soon as you stop it, you start to see a very quick decline down as soon as that stimulus stops. So there is definitely a case for a QE3, and although they might not want to call it QE3, it definitely looks like they might need more stimulus in that United States market and get that consumer buying again and spending again.
We're getting more of a sense as well that, the removal of QE by the Fed is having a larger and more pronounced effect on other global economies. We've seen it trickle through to the Eurozone, some of that effect. To what extent is it having a bearing?
Well, obviously, directly in America, you start to see the unemployment numbers come off straight away. You start to see that spending is down, GDP is slightly lower, and then the sentiment of America slowing down has a ripple effect right through all markets around the world. So you really need a strong America for the whole world recovery to happen. So as soon as America starts to slow down because of that QE3, there's a ripple effect across all countries, and it just shows you with that debt problem in Europe, it's just exaggerated.
Locally, we've had the JSE going to about the 32,800 level before slipping back to 30,500, and it's done that 3 times so far this year. It seems that there's nothing really to push the market up. To what extent are you taking solace in the fact that many can't actually foresee anything in the future that's going to weaken the market dramatically from here on out?
Well, we've been trading in a very broad range in the markets, and it's been about a 3,000 to 4,000 point range, and we've moved up to the top a few times and down to the bottom, and it has been tradable in between those levels. But as we get to the lower levels like we are now, you start to see how difficult it is to buy this market, and although there is buying coming in, the sovereign debt issues in Europe I think is the key. I think if there's sovereign debt, if Greece defaults, we'll finally break that level and go down to new lows, and maybe into the 26,000 level, so a good few thousand points below. But without a sovereign debt issue, and if Greece maintains itself and Italy's not downgraded, I can't see it breaking any lower. So I think that the crux of the market and what the market is waiting for is, can Europe save itself?
Chatting to analysts at the desk, they've been saying that they see very little opportunity in the market right now locally, for the most part. What's your view? Because ultimately, what we seem to be looking at this stage is a stock picker's market.
Yes, it is a bit of a stock picker's market, and it's getting more and more difficult as the sovereign debt issues get higher and higher to pick those stocks with certainty. But if you take a look at some of the very big general miners, they're starting to show value. We see Anglo's at the lower range. It's not quite there yet, around the 309 level. It's trading at about 325. You'll see a lot of buying coming into Anglos at those levels, as well as BHP Billiton. BHP Billiton are still doing a share buyback at the moment, so there is a little bit of support. So a few more percent on the downside, you'll start to see a little bit of buying coming to the resources. And that's your view, obviously, that there is not a sovereign debt issue, not a sovereign debt default in Europe. On the industrial side, we see a lot of corporate action happening. We see interest into Bidvest. On the mining side, Metrics has got some interest going into it, obviously with Massmart, with Walmart. So there's a lot of corporate action and unbundling of stocks like we saw in Brait.
So this is the time then, one would assume, where you pay attention to all that noise around corporate activity and the possibilities that could unfold in the near future, as opposed to blocking it out as noise.
Yes, I think so. I think that in a difficult market like this, companies are looking to extract shareholder value, and a lot of the time unbundling is a way to do that, and it's something to look at. We saw the Brait share price when they started to do the unbundle, on the way they structured the business, all the way down to 16 Rand 50, and they had issued new stock there, and it's now already trading at their net asset value of about 1750 to 1780. So that was something to look at. There was a really good uptick, about 4 or 5% as you could make straight away there. Secondly, Bidvest, there's a buyer coming in and looking at their food business, which is nearly 50% of their business, and that will also be an unbundling of that business and shareholder value coming through as well. So definitely something to look at. Obviously they are high risk, but if the fundamentals of the company are good, like Bidvest, and the same with Brait, it's definitely something to look at and something to invest in.
Well, let's take a look at a couple of news items on that corporate news front today. Japan's Kansai Paint is appealing the ruling from the Competition Commission, requiring it to sell a unit of a free world in order for that transaction to go through. Market reaction to that news?
I think they've had such a long process with Free World Paints, and initially Free World didn't want the deal to go through, then they did. It's really been a long process. I think shareholders are quite frustrated at the moment. I think generally it's a good purchase for Kansai Paint, Free World. The Plascon brand very strong. You know, it's a relatively small company on the exchange, and I think with everything that's happening, people are looking past it. I think that they will appeal that. I think it is quite an interesting play for them if they lose that one asset. So looking at it closely, but something that's quite small, and people are rather looking at corporate actions such as the Bidvest and Brait corporate actions.
Some still saying a transaction that was loosely bound by conditions, Massmart, Walmart, and that Massmart in the news again today, announcing that it's got intention to acquire fresh produce supplier, the Fruit Spot. I mean, this is a player that's really coming through now with quite a bit of aggression in terms of how it's tackling this market, Rob.
Yes, absolutely. Fruit Spot, people might know it as a private company, and it's a very large fruit company, probably one of the biggest in the country on the fresh produce industry. They deal in wholesale only, so it suits the Walmart model. And it will be a very lucrative deal for the private individuals. It's family owned and a good exit for them. At the same time, it gives them great coverage into that area, and I think companies such as Shoprite and Pick n Pay will be very worried about a purchase like that. They've been a very difficult company to buy, so I think they will have to pay quite a lot for them. But if it does go through, it will definitely leave Walmart in a very strong position with fresh fruit produce.
Rob, very quickly, do you see it triggering any alarm bells on the competition side of things, you know, from the Competition Commission in terms of the hold this market is looking to get, this company is looking to get?
No, I don't think so. I think it's good for competition, and especially on the food side. The more competition on the food side, I think the better. I don't think they're buying a produce, they're not taking market share above 50% at all. So I think it's really good for the market. I don't think the Competitions Board will have a problem with it.